Stock market, we're going to look at this analysis, but first do please read this slide. It tells you about important information about our analytical style and what that means for you and how you apply the work. So this is important. So just take a moment to read this. Stock market analysis, S&P 500. We're going to look at the SPY weekly and daily analysis and projections. And we're going to also use the VIX, the VIX, to time the coming market peak. Now, we have seen a change in the market recently as we've seen the rally in the NASDAQ stall and actually have a pretty big pullback on Thursday, but at the same time, the broad market remaining strong, clearly money moving into the Dow, which is made up of cyclical stocks and old economy stocks and the super high valuations in the NASDAQ supplying funds. Money comes out of those and moves into these other areas of the market. So when you get that, that's a pretty bullish occurrence still because money's still moving in somewhere. And even though the nature of the market may be changing, we have conditions that such support the market still moving up outside of some what we think are minor pullbacks that are coming, may have actually started, and then a further rally. And we think that rally is going to go out into mid-August, and I'm going to show you why and what the timing is on that as we look at these charts. First of all, just a little bit of a primer for those of you that are brand new. This is cycle analysis. I know the charts look busy, but once you get comfortable with them, they have a very, very good way to give you a sense of the conditions of the market. We have our proprietary indicators that are on here. This is the reversal scout right here, which I'm using as the momentum indicator for the intermediate or weekly chart. You can also use the slim ribbon, which is right on here. The slim ribbon PO is right here. And these are how we tell what the conditions are of the market, along with the shape of cycles. And cycles are essentially the heartbeat of the market. This is a way we visually see money flows. And when you get cycles that are negatively configured, in other words, lower peaks and lower bottoms, you have negative situations. When you have a higher peak or a higher bottom, it sets up further rally that you saw right in there. Let's just blow up the weekly chart here, and you can get an idea of where we are. And that is that the yellow areas are the periods of risk, and that is where a minor cycle and a dominant cycle moves to the downside together. Now you'll notice that each of these harmonic families are made up of half cycles and full cycles, this being the minor, this being the dominant. And when they're coming down together, then that is a period where you get risk of a correction, as you saw right over here. This was 37 points approximately on the SPY, or 370 points on the SPX, and there is a time frame in here that's coming up for another one of those where the minor and the dominant cycle begin to come down. Now here's your support zones right in here, so we're projecting that this pullback would come out sometime in beginning mid-August, then coming out potentially out to early October, where there's a pretty good likelihood that it's going to come down to supports. Now this support right over here is at around 438 on the 23.6%. The next one is down over here at about 427 on the SPY, and that's where we would look for this pullback to come into October or sometime late September, where the market does give ground. If this was a lot sharper on the downside, it will change the scenario for the upside move. But right now, ideally, this is what we expect, this period of correction in here, which would probably be, 6, 7, 8% on the downside in the stock market, looking at the SPY. Now I'm going to switch over to the daily chart here, and we'll get an idea of what's going on here. Also, the harmonics in here are just absolutely fabulous. Now, the thin lines that you see right over here, the vertical ones, show you where the low came on the mid-cycle, the shorter cycles in here, and then the darker one shows you where they come down together. This green one here is the Russell, and we've talked about the Russell getting a minor pullback in here, affecting the stock market, and then the market moving up again. So we're looking for a minor pullback right in here into the early to mid-August previous period and then another move up. And this period right there is into this middle of August period. Now, this is a long advance right over here, and you could see we're looking for a shorter advance here. Why would we be doing that? Well, the VIX is giving me some information that helps me with that. I want you to see that momentum conditions are strong. This is where the slim ribbon turned positive right over there, and it got neutral for a day over here, but basically it has stayed positive right there. The slim ribbon PO is giving you these bullish momentum resumption signals that you can see right in there, and that has kept this market moving to the upside. We've said that our technical condition indicators have told us that the market still had upside in it, and that's still where we are. And that's why we're looking for only a shallow correction in here as we look at the strength here on the weekly and the strength here that we're looking at on the daily. Now, I want to move over and look at the VIX because that's so important to this information. The VIX has been a great timing tool for us, and over the last year or 2 years, it's been great. It got a little bit out of whack for us for a couple of months, and now I think is in much better shape. I want you to see as we look at the side by side that there is a ideal low in the VIX on the weekly chart that points to the first to third week of August. We have this ideal low over here pointing to around the middle of August. This is nesting right over here with this low right over here. And last time that happened over here, you got set up for a big upside spike in the VIX. We think that's likely to happen. As you see, we're pointing to VIX out over here in September, October period that could be, up to 20, 22, and it could be all the way up here into the 30s. We don't really know. This is just that period of risk that we're looking for in the stock market, which we said could have a 6, 7, 8% decline, and the selling could get pretty severe in some of these very overbought NASDAQ stocks, which have just now started to move to the downside. So the VIX is giving us timing that the time frame right around the middle of August could be an important at least trading peak for the stock market. I'm going to go back to the SPY just to look at this one more time on the side by side, and you get the idea that what we're looking for over the next several weeks and even into the next middle of August right over here is a choppy situation. Potential for a pullback in here. On the minor pullback here, we're kind of looking for, this is 445 right over there, that it could pull back to. This is around 438 right there. That makes sense for a minor pullback here into the early part of August. Another rally here into mid-August that challenges the highs right there. Again, we think that the S&P 500 will probably slightly outperform the NASDAQ, but at the same time, I think that the NASDAQ will vastly underperform the Dow and the Russell. Russell benefiting from the this rising phase that we see right over here. We looked for a minor corrective period here to affect the stock market, and then moving up again. The Russell benefiting from lower interest rates that we see happening. And then the Dow, of course, benefiting from the move out of the NASDAQ stocks into the cyclicals and old economy stocks that heavily populate that Dow. So momentum conditions still quite strong, as you can see on here, but I want to go to the market condition indicator, as you can see right here. This is an important application that I think that everybody should have. It just gives you a great idea of the market conditions and the changing market conditions. We're looking here, of course, at the 4 indexes that I referred to. On the intermediate term, using our algorithms, you can see that the SPY turned very bullish and the NASDAQ very bullish back on the 12th of July. This was an uptick in the IWM back at the end of June. And the 13th of July is when the Dow went very bullish. Now, this is the intermediate conditions. We're in the trader mode over here. You could do a time frame mode also, but I want to step down here to short term. And you can see there are downticks right in here as the SPY is now ticked down to bullish. the QQQ to neutral and the IWM ticked down to bullish, but the Dow remains very bullish. And this is reflective of what I'm saying, that money moving out of the tech stocks, the AI, into the Dow, and it's very apparent when you use our algorithms. Let's just look at the near term, which this is looking out for conditions over the next week or so, and you can see that the SPY is neutral now, while the QQQ actually went to bearish, the IWM and the Dow at neutral. So this gives you an idea for the very near term what the conditions are in the market. But we're focusing on the intermediate term and short term, and they're still pretty strong. And this is reflective of why we think that the pullbacks we see coming in the stock market are likely to be shallow, and that overall the market conditions to be very, very good until that time when that VIX bottom comes and sets up this peak that we're looking for right over here. Again, one more time, we're looking for minor pullbacks, likely the S&P, the SPY gets down to that 445 level. That's not very much, with a shot down over here into early August. To about 438. This could be late July that this bottom comes in, this trough, and then move up again into this mid-August period to probably test this level on the SPY, take it out by a little or miss by a little, and then that riskier period right over here from mid-August to early October, where there could be a sizable decline that looks like this one here. This was 370 points. If it stays in the channel, that would get you down here to 427 to about 420 here on the downside. The deeper this goes right in here, the more risk there is that the next advance over here out towards the end of the year will be more of a struggle. So we'll wait to see where that goes. We are only looking for this modest decline in here of about 370 points or so out into October. That is really only that 6, 7, 8% decline, and a very modest correction that we're projecting out into that period of risk, as you could see labeled right over there, from mid-August down into the early part of October. That does not mean it declines through this whole period. It opens up the window for that corrective process to take in, where this dominant and minor cycle are coming down together, just as you saw right over here. I really do want you to go to askSlim.com, to the top of the website, look at workshops. There's free videos there that you can see on the cycle analysis workshop, which is such important information. Again, here is that market condition indicator included with level 4. That's it for this update. I want you to go to askSlim.com and do look at the special we're running now. Click that Learn More button. You'll learn all the information on how to get level 4 and that market condition indicator and everything in level 3, 2, and 1 for 35% discount.